Hey everyone, in today's video, we're putting a powerful trading strategy to the test, combining the 5, 8, and 13 EMAs with another key indicator. We'll code the entire strategy in Python, optimize it using Freqtrade, and run backtests to evaluate its performance. Let's dive in. To begin, let's quickly go over the key indicator we'll be using in this strategy. The 5, 8, and 13 EMA, exponential moving averages. The exponential moving average, EMA, is a moving average that gives more weight to recent price data, making it more responsive to market movements compared to a simple moving average, SMA. 5 EMA, a short-term trend indicator that reacts quickly to price changes. 8 EMA serves as a transition between short-term and mid-term trends. 13 EMA, a slightly longer short-term moving average that helps smooth out minor price fluctuations. A bullish trend is confirmed when the 5 EMA is above the 8 EMA, and the 8 EMA is above the 13 EMA. This signals upward momentum. A bearish trend is confirmed when the 5 EMA is below the 8 EMA, and the 8 EMA is below the 13 EMA. This signals downward momentum. The parabolic SAR, stop and reverse. The parabolic SAR, PSAR, is a trend-following indicator that helps determine trend direction and potential reversal points. When SAR dots appear below the price, it signals an uptrend, bullish market condition. When SAR dots appear above the price, it signals a downtrend, bearish market condition. By combining the 5, 8, 13 EMA with parabolic SAR confirmation, we can filter out false signals and enhance the accuracy of our trade entries and exits. Now that we understand the key indicators in our strategy, let's dive into how we can apply them to analyze trends and generate trading signals. To enter a long trade, we need all of the following conditions to be met. 1. 5 EMA crosses above the 13 EMA, indicates that short-term momentum is turning bullish. 2. 8 EMA crosses above the 13 EMA, confirms the transition to a stronger upward trend. 3, 5 EMA, greater than 8 EMA, greater than 13 EMA, a clear bullish structure where the faster moving averages lead the trend. 4th, multi-time frame confirmation. To strengthen our signal, we also check a higher time frame. If the 5 EMA greater than 8 EMA greater than 13 EMA condition is also met on the 4-hour time frame, it confirms a broader uptrend, reducing false signals. 5. Close prices above the parabolic SAR. The price must be trading above the SAR dots, further validating the uptrend. Once all conditions are met, we enter the long trade on the next candle. To determine the stop-loss level, we identify the lowest swing low from the last 5 candles and set the stop-loss just a little below this level. For take profit, we use a 3-to-1 risk-reward ratio, meaning our target is 3 times the stop-loss distance. So you can see, this is a successful trade. Now, let's look at how we take a short trade using this strategy. To enter a short trade, we need all of the following conditions. 1. 5 EMA crosses below the 13 EMA, indicates that short-term momentum is turning bearish. 2. 8 EMA crosses below the 13 EMA, confirms the transition to a stronger downward trend. 3. 5 EMA less than 8 EMA less than 13 EMA, a clear bearish structure where the faster moving averages lead the downtrend. 4. Multi-time frame confirmation. Check the 4-hour time frame to ensure that the 5 EMA is less than the 8 EMA, which is less than the 13 EMA condition is met, confirming a broader downtrend. 5. Close prices below the parabolic SAR. The price must be trading below the SAR dots, further validating the downtrend. Once all conditions are met, we enter the short trade on the next candle. To set the stop-loss level, we locate the highest swing high from the last 5 candles and place the stop-loss just slightly above this level. For take profit, we use a 3-to-1 risk-reward ratio, meaning our target is 3 times the stop-loss distance. As you can see, this is another successful trade. Of course, not every trade will be this perfect, so it's important to backtest to validate the strategy. Now that we've covered the strategy, let's dive into optimizing it for better performance using Freqtrade, a free open-source crypto trading bot built with Python. If you're interested in learning more about Freqtrade, be sure to check the link in the description for a complete Freqtrade course. Here's the plan. We'll test our strategy on the 1-hour time frame. We're splitting the data into two parts. In-sample data, 8 months. We'll use this data to fine-tune the parameters of our strategy. Out-of-sample data, 4 months. This data will test our optimized strategy on new, unseen data to see how well it holds up in real market conditions. We'll focus on optimizing the following important parameters. EMA settings. We'll be testing various Fibonacci values for the EMAs, like the 358 EMAs, 5813 EMAs, and more. EMA cross-rolling window. This tests how far back the EMA crossover remains valid. Stop loss buffer. We'll test a stop loss buffer by setting the stop loss slightly below the swing low or above the swing high, adjusted by a percentage range from 0.1% to 0.8%. Swing point. Look back. This defines how many candles to look back when determining swing highs and lows. Risk ratio. This helps define the risk-reward ratio for each trade. We'll use Freqtrade's HyperOp feature to find the best combination of these parameters with the goal of maximizing the Sharpe ratio. Once we've optimized the strategy, we'll run a backtest to evaluate how well it performs with the chosen parameters. All right, let's take a closer look at the backtesting results. The backtest was run on DOT perpetual futures, using a 1-hour time frame over the past 1 year with the optimized settings. Now, let's break down the results. The total profit achieved was an impressive 200%. During the same period, the market itself experienced a 14% decline, highlighting the effectiveness of the approach. The maximum drawdown was 16%, which shows that while there were pullbacks, the overall profitability remained strong. Next, let's take a look at the visual summary of the results. As you can see, the graph is in a clear uptrend, meaning the strategy consistently generated profit over time with no major setbacks. This indicates the approach's ability to adapt to different market conditions. The optimization was done using 8 months of in-sample data, fine-tuning parameters to achieve the best possible settings. Afterward, it was tested on 4 months of out-of-sample data to ensure that it performs well on unseen data and is not overfitting to past trends. If you'd like to download the Freqtrade strategy file and dive into it yourself, be sure to check out the link in the description below. I've also created a pair-optimized version, allowing you to trade multiple pairs in one setup, each with its own fine-tuned parameters for enhanced performance. If you found this video helpful, don't forget to hit the subscribe button, turn on notifications, and share it with your friends. Thanks for tuning in, and I'll catch you in the next one.